So underinsurance is kind of a funny situation because a lot of people don't even think about it, know about it, or worry about it. And it's only when you have a serious incident to your home, usually that's a fire, that this comes into play. And so, yes, it's a very low percentage that can happen, but there are other things nowadays as to why underinsurance is becoming a little bit more prevalent with people when it comes to their homes and the amount of insurance on their homes. So we're going to go over a few things here in this video about this. My name is Mike Keeler. I'm a licensed public adjuster in the state of Florida, and I represent people against their own insurance company for any type of homeowners claims, whether it be roof, water damage, fires, things of that nature. So what if your home burnt down tomorrow? Should be if. Good spelling, Mike. Way to double check it or overlook it. So would you have enough money to rebuild? What did insurance pay? And what are the chances that they underpay the claim? So I always like to keep things a little bit simple. So let's try and talk about what underinsurance is. Seems pretty basic, but let's just talk about it because there are some things that could get a little tricky here. So really, it comes down to coverage A and B. Uh, More so coverage A, right? B could come into play. Usually those are lower limits anyhow, but really you're talking about your home in general. So that the limits are not sufficient to rebuild your home. And the other thing is that there could be gaps in coverage because the policy might not cover certain losses. So then technically you are underinsured. So here's just a few things on generally how it happens, I guess you can say. The undervalue of the property is a key component. Inflation, especially the last couple of years that we've had inflation everywhere across the country. The local property appraiser website, which would be basically the info from in the county database. All right. It also happens because of ACV, which is actual cash value, if that's what you have in your policy, rather than replacement cost value. That can come into play pretty pretty significantly. And if you do any type of updating, remodeling, additions to your home, um, this is quite common too, especially where homes are more expensive and people are adding on or doing some remodeling to their home. You have to take a look at your policy. Did that remodeling, add an addition, redoing the backyard, whatever it is, um, did that increase the value of your home? And is the policy that you have good enough to provide coverage should something devastating happen to where the house is destroyed? So, can you avoid it? Yeah, you can. It's pretty simple. Um, but it's one of those things where you just have to remember and be on it. And that's not easy. And unfortunately, agents um, may recommend it, they may not, and they may not even call to say on a yearly basis, just renew your policy. Sometimes there's a buffer in there, obviously, where your premiums go up every year and the coverage goes up a little bit. So, one way you have to get replacement cost coverage rather than ACV. I talked about that before. ACV is replacement cost minus depreciation. So, if you have an older home, you'll get killed with depreciation. Um, when you do any significant upgrades, remodeling, additions, you should call your agent and maybe tack on a few $1,000s onto more so coverage A, but possibly also coverage B. That may automatically go up. Um, and then getting a policy from a better insurance company to save headaches. That will help avoid this problem. Because some of these bad companies, no matter what your insurance are, they're going to underpay you. Now that's different from underinsured, but you don't want to be fighting with them, as I'll show you on the next slide, because there are some possible penalties. So there's something called the 80% rule and possible penalties when it comes to this 80% rule. So what is it? The insurance companies want you to at least insure your home for 80% of the rebuild / replacement cost value. That's in a nutshell. What happens if you're 80%? So depending on your policy, there could be a co-insurance penalty, and the payout of the claim could be reduced by that percentage. For an example, I put it here. If you have a $100,000 house, cost to rebuild it, replace it, and your policy is $70,000, all right, you could face a penalty if it's totaled out. So let's wrap this up. A perfect example is a current claim that we have where the policy is like 310,000, I think, 310, and the damage to the house is over 500, and that's the cost to rebuild now too. A lot of reasons for that: the increase in prices, difficulty finding a builder, higher quotes, labor costs, insurance costs, all that takes into effect. So he is underinsured. As I mentioned, the house is a total loss, going to cost over 500. And as I mentioned from the start, sometimes we forget about this to find out what our coverages are. I did a few years ago. Policy just renewed. I didn't think about checking it. Time flies, right? But it's good every once in a while to kind of look back and just see, all right, we did this, this, and this, and if there's a fire, it's going to cost a lot of money to put this money back. Are we properly insured? So it's rare that a home is a total loss. Usually that's only by a fire. However, there are some changes in Florida, at least, because you have all this 50% rule with FEMA. All right. So if the house is hit by hurricane force winds and you have 50% damage to the building only, I won't get into all the calculations, and you're in a flood zone, regardless if the flood happened, it can be a constructive total loss. So quick math, you have a house that's $1 million, building value only with the county, and you have damages of $600,000. That would be considered a constructive total loss. Okay, so that's pretty much it. Just a little reminder. Doesn't really have to do with claims, this video, but in a way it could, because it's important to point out some critical factors that could come into play. They're rare situations, but nonetheless, it's important to keep up on things, especially if you happen to live in areas that are a little bit more affluent and the houses are a little bit more expensive. Those tend to be a little bit more of an issue because the policies are more expensive, so people are trying to lower their costs more, versus somebody who's in a rural area, smaller home. Those policies they're not that expensive, so just keep that in mind. As always, thanks for watching this video. My name is Mike Keeler, licensed public adjuster in Florida. If you have a question, need help with the claim, here's how you can go to hold of me. I appreciate you watching this video again. Thank you.